Every company, which is a large corporate, which is a buyer, has to participate compulsorily as per the directive of the MSME ministry to be registered and participate on the TReDS platform.
India's factoring market is currently valued at about $140 billion domestically, but India's share of global FCI volumes is relatively small.
They are earning much better in the TReDS mechanism. So win-win situation for all the stakeholders involved.
I'm Deepesh Patel, editor at Trade Treasury Payments. Today we're talking about India and the state of Indian factoring. We're at the FCI 58th annual meeting in Lisbon. I'm delighted to be joined by the CEO of India Factoring, Ravi Valecha. Ravi, welcome.
Good evening to you. Thank you so much for having me on the panel, on the discussion.
You too. So India's factoring market is currently valued at about $140 billion domestically, but India's share of global FCI volumes is relatively small. What's holding the market back?
So coming to that 140 billion, now just step back and come to the sizing of the market. How do we size that market, $140 billion? So as the export market from India is $850 billion. If you take out the businesses like commodities, oil, which is not factorable, and do away the LC part of a business, the opportunity sizing comes to around 140 billion. So that's the opportunity. As against that, if you put together all the banks, financial institutions, factoring companies doing the cross-border trade, is around about a $2.5 billion. Okay, even if you consider supply chain finance business, possibly a $5 billion. So that's a clear gap of around about $135 billion in the open account finance, which is not being done by the factoring product. Am I saying that it is not getting financed? No, but it is getting financed in the regular traditional trade finance mechanism, but that's a leverage or loans on the balance sheet of the bank or the company who's borrowing that in. As against that, the factoring is the opportunity, which today is very limited in that scope. We heard during the event in FCI annual meeting, the Portugal authorities shared that it's 20% of the GDP is contributed by the factoring, under the factoring, whereas in India it is 1% only. Now the legacy in India has been there. Factoring has not. Factoring is a little bit of operationally intensive business, as against that normal banking facilities are plain Manila, and the legacy effect, people are used to doing traditional trade banking business in the regular manner, so they find it more easier to approach the bank for lending facilities than to the factor. So that has been the carry effect. Having said so, now the numbers are improving. This 1% which we are talking about was possibly 0.1% few years back. Specifically to name, after the TReDS, the regulations came in around about 2017, and after that there has been a slow growth, but now there has been an immense growth in past couple of years, so much so that the TReDS mechanism is funding around about $35 billion of trade in the domestic trade itself. TReDS is operating nothing else but a factoring product.
Yep.
So that's the huge driver, and that has created the awareness about factoring. The same thing is now getting evolved to other aspects of the business, and customers are now front-ending and asking for it, for the factoring product to be financed on a regular basis. So that's a brief genesis of the factoring in India.
Super interesting, and yeah, commendations to India for that growth. Was it also to do with the change in the regulation? Because in 2021, the Factoring Regulation Act came about. So has that helped, or are MSMEs still lagging behind?
There was spate, not just 2021 was one definitely which made no noise, but there were a spate of initiatives taken by the regulator. You'd be surprised that there was an ambiguity on doing a non-recourse factoring also in Indian regulations. That was clarified, then the TReDS came in, then the 2021 came in, the clarifications on the factoring, and after that even more. Earlier only the banks were allowed to do factoring transactions on the TReDS platform. The 2021 and thereafter the regulations changed, and that enabled even the non-banks, that is the non-bank finance companies, not under the factoring category but general category, to also start trading on the platforms, participate on the trades activities. So MSME finance has seen improvement definitely, because that's the endeavor, that the benefit ultimately, it's an initiative to drive ease of finance for the MSMEs. So it's under the MSME ministry, which is specifically there in India, which is focusing more to provide that sort of a coverage. Now, what does that mean under TReDS is that every company which is a large corporate, which is a buyer, has to participate compulsorily as per the directive of the MSME ministry to be registered and participate on the TReDS platform. Second thing is that every supplier beyond a certain threshold has to do an e-invoicing, and these both initiatives are a sort of a carrot and a stick approach, that you have to do it. So it's a mandatory that they have to transact on the SME platforms, which are the TReDS platform. One thing it has done is that it has increased the financing aspect, the ease of financing, because the benefit of that underlying receivable was never fetched. In the regular scheme of things, the SMEs used to approach the banks. The banks used to finance under receivables financing, which is a loan, not a factoring product. It used to sit as a loans and advances on the SME's book, and this was categorized as a loans, and that was creating a leverage situation for the SMEs also. Besides that, they didn't have they were getting funding to an extent of around about 70-75%, which is the usual scheme of things. Today they are getting 100% of that funding minus the charges, whatever is coming in. So
Yeah.
that's the difference. It has created that, or mitigated or covered that sort of a gap of 25%, which was locked up in capital for the SMEs. So it has created that sort of a liquidity positions for the MSMEs. Is it 100% foolproof at this point of time? No, because it's only a few years now since the growth has started touching the roof now. It is so year on year basis, the CAGR impact possibly is much more now in last 2-3 years than the initial years. And as we go ahead, today also we heard the chairman talking about 60 million MSMEs in India, with around about 45% contributions to the Indian economy. So that 45% is not 100% covered as of today as well. I would say it is still at 5 or 7% at this stage, but
Yeah.
definitely it is this reaching this 5%, 7% stage was sort of a mission critical, and it took 7 years or so to reach that state. But having reached this stage now, if you see the year on year growth is possibly more than 100% on this MSME platform, which was possibly 4 or 5% in the initial years. So now that the cycle has started, we are expecting that the growth is going to be much more compounded than what we have seen now, and possibly it's a set the precedent for much more beneficial treatment for the MSMEs in future.
Thank you very much. That's super interesting. I want to talk about the Reserve Bank of India, because that they've set priority sector lending directions just last year in 2025, and now recognize MSME factoring transactions as eligible for priority sector credit. What does that mean, and do you think that's going to turn the needle?
Yes. So the priority sector lending in India has always been there as a guidelines since a legacy, possibly more than 50 years. The benefit which was categorized into MSME financing and the exports financing part, and there is an agri part of it also which was there. Now, under the TReDS, that is the benefit which is coming into the banks, and that's why you see. So, what was a carrot and a stick approach was that if the banks were not able to fulfill that obligation, and as you know, in MSME financing, there were risk involved, and that's why the corporates, the banks used to ask for a security, and which MSME was not able to provide. Because of that reason, the MSME financing, which was under the priority sector, possibly many banks were not able to cover or reach that requirement or threshold, which is minimum advances which need to be there. Now, with the TReDS mechanism being there under factoring, the banks can use the priority sector lending. Whatever they fund under the TReDS platform is categorized as a priority sector. If they are not able to, I'll give you the example. The reason being, the PSL, if the banks were not able to fulfill that gap, they had to park that gap funds into the government bonds, which were not attractively remunerative at that stage. As against that, possibly TReDS mechanism provides them an arbitrage.
Yeah.
And that's where you're seeing the increased tractions by not just the Indian banks, the public sector banks, but even now the priority, the foreign banks which are there present in India, because the obligation of PSL is even there on the foreign banks.
Yep.
Foreign banks, global banks, they have always been shy on MSME financing, but for obvious reasons. Their vision or their outlook is different, their appetite is different, and they serve possibly the most trade corridors from the geographies which they come in, and that's where possibly there was a gap. Now this financing position being available, this is a secured mechanism where the buyer has accepted the payment, so it's a obligor risk is on the buyer, which could be the larger corporate in this scheme of things. So it's a secured mechanism. It is not obviously a collateral back, but itself the security created by a security interest created, which is registered with the centralized registry,
Yep.
itself is a secured mechanism which is providing the banks incentive enough to de-risk and provide that financing.
Yep.
And that covers under the MS and under the PSL structures, fulfilling their obligations under PSLs. So win-win situations for the buyer, for the MSME player as well, and for the banks who are ring fenced against the default, because their obligor risk is on the larger corporate,
Yep.
which is much more secure, and it frees up the obligation on their PSL, provides them the arbitrage from the earnings point of view, rather than parking it in the government bonds at a lesser attractive rates. They are earning much better in the TReDS mechanism. So win-win situation for all the stakeholders involved.
Yeah, indeed. Now, here we are at the FCI conference, and last question, obviously the Bharat vision, 2 trillion export ambition by 2030. Obviously, IFSCA and Gift City are really driving and meant to be part of that infrastructure and help us get there. For those Indian export factors here at FCI, what can FCI be doing to really support the network, to support the Bharat export vision?
Yeah, so FCI is providing all the nuances or the finer aspects. I would say the recipe for successful companies now to utilize that case. I would say there was an advocacy which is talking about with the regulators and stakeholders in the market to disseminate the information or awareness about the factoring product. One is that create the legal framework for the regulators and the stakeholders under UNIDROIT and various other practices which has been done. So FCI is providing that support as well. On the FCI Academy front, it's a hell lot of information which is available. It's for the user to benefit out of it. Of course, it comes at a cost, because that's the proprietary information which FCI has created with a lot of pain over past 60 plus years. And there is tons of information. Just to showcase, in my company, we have 70% of our people certified on various courses. If it's an operation person, it's an operation course. It's a risk person, risk course. So depending on which is the expertise of that person, 70% of my team is certified on various FCI or factoring courses. That gives the strength, because if you're investing in that skill set, if you are building a book on the factoring, if you want to do a business on factoring, you need to have a skill set for that. So FCI is doing about it. The next step, which FCI has today talked about in the opening statement by Betul, was that the hub consultancy, which is being new initiative. So that's going to be the initiative where FCI is going to provide a consultancy for the new companies under factoring or under the receivables finance mechanism, to provide all the, from the start to the end, consultancy support, that what all you need to do to set up a successful company. So that's a sort of an active engagement which is being done by the FCI, and I think that's going to be a new paradigm for the FCI in providing support to the ecosystem.
Thank you very much. Education, regulation, collaboration, those are the key themes that FCI are set to help India's export factoring market grow. We've been joined by the CEO of India Factoring, Ravi Valecha, at FCI's 58th annual meeting in Lisbon. Ravi, thank you very much for your time.
Thank you so much. Pleasure was all mine. Thank you.